Hi guys, in today's video I want to cover the real estate market report for December of 2022. It came out just a few days ago in the month of January in 2023, but it covers the month of December. And everyone, real estate agents, buyers, sellers, investors have been anxiously awaiting the release of this report because the market is shifting. It has been shifting since March of 2022.
February.
Yeah, it's been trending down since that time. And we want to look at the numbers. We want to see what we need to do as homeowners or as potential homeowners if you're looking to buy, or as investors. So basically we're trying to play the predictions game by looking at the numbers, trying to make sense of what's going on and what we need to do in the coming months of this new year. So let's jump right into the numbers and let's look at what the market is telling us. Okay, so the report itself is very long. It's 27 pages. We're not going to cover it in its entirety. We're going to focus on page number 1, which is a condensed view at everything that's happening in the marketplace and the economy in general. On the left-hand side, we have the basic economic indicators. The real GDP growth is down 2.9% right now. Toronto employment growth also slightly down. It's minus 0.3%. Toronto unemployment rate is at 6.3%. It's slightly up from a month prior. The inflation, that's a big one, is at 6.8%. It was at 6.9% back in November. And this is still a far cry from where the Bank of Canada wants to see the inflation rate. So the band that they want to bring it down to is between 2 and 3%. So with us being at 6.8%, it's just a trickle lower than it was before. We're still expecting that the interest rates are going to continue climbing up. The next Bank of Canada interest rate announcement is going to be on January 27th, and everybody's talking about the likelihood of an increase of at least 25 basis points, possibly 50 basis points.
Until today, we had 4% already increase since the beginning of 2022.
Yeah, 7 consecutive increases, which brought us from 0.25% in the beginning of the year all the way to 4.25%, right? So that's kind of the next number that we see here. It's reported as 4.3, so they must have rounded it up to the next decimal, but it's 4.25 if you look at the Bank of Canada website. And the prime rate is at 6.5%. So that's for economic indicators for the market. On the right-hand side, we have a couple of graphs. The first graph is covering the sales activity in the market, and the second one is covering the average price. So if we jump over to the right bottom section of page number 1, we're going to see the same numbers here. So sales, let's talk about the sales. 2021, we had 6,013 units sold versus 2022, 3,117 units sold.
48% decline.
48% decline, massive, that's decline. Right. Yeah. New listings. For new listings in 2021, we had 5,177 new listings, and this year we have 4,074. Also a substantial decline of 21.3%.
Yeah, but when you look at active listings, you see that this is really a more true number, 169% decline, because some listings might be new listings, but been on the market for quite a long time, every time relisted. So 169% decline on increase on active listing is a huge increase on inventory.
Yeah, just in absolute numbers, 2021 we had 3,231 listings sitting on the market.
Yeah.
In the month of December versus 2022, we have 8,692. Yeah, those numbers are actually painful. So we're going to talk a little bit more about that once we cover the remaining two. And average price, that's the number, or rather the piece of statistical information a lot of people are sweating over. They're thinking that prices have declined dramatically, like across the board. Whereas if you look at this closely, this is not the case. Yes, some neighborhoods have decreased substantially. Other neighborhoods are actually trending up. Especially, this is true for the condo market.
Yeah, I mean, 9% decline is not as dramatic. We see year over year, C11 for freehold had the highest decline, 25%. But for condo market, definitely there hasn't been much of a decline.
Oh, if anything,
When you
it's been
compare to
appreciating. It's been
freehold.
appreciating, Mitra, actually, year over year.
Certain areas have had a decline. For example, in Markham, there was minus 2% decline. This is not a massive decline when you look at it.
Yeah, this is true. Although, if you look at what the Toronto Star has been reporting in one of the articles from last week, they were saying that the massive inflow of new construction condos is coming
Yes.
to the market in 2023.
Yeah.
And that will bring at least two issues
Yeah.
along with it.
For sure.
Lots of rental units,
That's right.
because there's a lot of investors that have purchased a few years ago and now they're closing on their property. And also people that do not want to hold this property as an investment property that purchased
Get a
some
mortgage.
time ago, or cannot get a mortgage, will actually be on the market to sell.
Exactly.
So most likely the condo market will follow suit because, the biggest decline that we've seen so far is in the freehold.
That's right.
Across multiple regions, actually, in Toronto, in Durham, in York region as well, and in the west of Toronto too. But with the inflow of new condos, most likely the condo market prices are going to soften in 2023 as well.
Yeah, we do see the decline mainly on the new construction, not on existing one, because the pre-construction projects have been literally priced higher than existing condos, so the decline would be more evident for those projects, for sure.
Exactly. And the last line here that we wanted to cover, we're going to jump over from LDOM, which we believe is not truly reflecting the conditions of the market as far as days on market are concerned.
Yeah.
PDOM, property days on market, meaning if the property comes in the market, gets suspended, comes back on the market, gets suspended, comes back again on the market. So that's really what we're seeing in the PDOM, property days on market. So right now it's 40 days compared to 19 days in 2021. It's practically double.
Yeah.
Right, from last year. 110% increase.
Yeah, 110% increase.
Yeah. So, Mitra, from your perspective, what do all these numbers tell you?
Yeah, it's a very, very good question. I mean, when you look at it, inflation rate really has not dropped, although they increased the interest rate. We see the affordability issue has not been solved. Homeowners are struggling with their mortgage payments, depending on which bank they are banking with. Because some of the homeowners we receive
They're either
calls.
struggling with that, with the mortgage payments themselves every single month, or they're struggling with them understanding, and you're going to talk some more about this, that whatever they're paying is actually going against the interest and not covering the principal payments at all.
So that's the new reality. Everybody knows that whatever you pay will go mainly towards the interest rate. However, banks are having different strategies how to help their clients, their customers. For example, with the Scotiabank, we do see that the monthly payment is increasing if you are on a variable rate. Every time there is a increase on interest rate, they adjust the monthly payment that would cover interest rate and principal. However, with RBC, for example, we are only talking about the 5 chartered banks here and using RBC versus Scotia as an example. With RBC, we do also notice that the interest rate increasing, but the monthly payment is not increasing all the time till they hit a trigger point where they would increase the monthly payment to cover the interest rate. But then the extended amortization from 25 years to 54 years, for example, just an emergency situation to make sure that their customers would be able to make the payments that in this situation is mainly paying interest rate, nothing goes to principal. That's really where we are. But some homeowners who are banking with the Scotiabank, they are suffering. It's not a question of $200, $300 monthly increase. It's a question of $2,000, $3,000 increase in their monthly payment, and not everybody can afford that. So here we are asking the question. So this is the new reality we are facing. It could take a couple of years till we get back to a new normal.
Or longer.
Or longer, we don't know. However, this is the time really to reevaluate everything. Why, if as a seller, if you want to sell your home, why you are not receptive to the reality of the market?
And actually, when we're talking about sellers not being receptive to the market realities, we're basing this
based on the active listings on the market.
Exactly. So active listings on the market have gone up by 169%, right? So practically tripled from 2021.
Yeah.
So what that means is that people are putting their homes on the market and they just sit there.
Exactly.
Right? So then they decrease the price and they still behind the market, the market deceleration. Then they decrease the price again, and again, since the market is trending down, they're constantly running after the market and nothing is happening. The properties are not selling.
So the question is why you are on the market in the first place. Perhaps this is not the time for a seller to come to the market and sell their home. They rather be off the market rather than being on the market at the price that is not helping anybody. You cannot really help your neighbors to sell their home because of the more inventory does not help, is more supply. And then, buyers are thinking that perhaps they can negotiate, but if they make an offer and they can go nowhere, then it's really meaningless. It's waste of everybody's time. But at the same time, that is an opportunity for any homeowners. If this is not the time for you to sell, what are your alternative solutions? What can you do? Can you afford to pay a mortgage payment that perhaps stretches you at every level? Then if you do have no problem, then great. Or can you come up with some alternative solutions, bringing some
like finding a new job
income or finding a new job? We do see clients, believe it or not, that they are working extra, having another part-time job or applying for a new job to simply increase their income to cover the mortgage payment. So reevaluating the whole scenario, at the end, what's your plan for the next 2 to 5 years to simply mitigate the risk of where you are right now?
From where we are right now, it still seems that the market is going to continue trending down for at least the next 3 to 6 months, because inflation is a lagging indicator. By the time that interest rates are having an impact on what's happening with the inflation, at least 6 months need to pass. So, we have the next meeting on the 27th, say the rate goes up by a quarter point. Before the Bank of Canada sees any changes in the inflation rate, we're going to be in the summer of 2023. So really between, say, now and the summer of 2023, most likely the market is going to continue declining.
Yeah, it's adjusting also to the new reality. I mean, where we are today is really where we were. My God, in 2000, when I purchased my first home, the interest rate was at 6.5%. And I was thinking, my God, is a great rate compared to when I bought my first home at 12.5%. So this is the new reality. And adjusting to this new reality means thinking of also some creative alternative solution. Yes, either having another job that would be covering some of your expenses, or having a short-term rental arrangements or homestay, simply sharing the space with somebody else can bring your costs down. You really need to reevaluate whether these are a consideration for you or you're simply thinking of downsizing. Perhaps that's the perfect time for you to sell your home and buy, because you are going to sell low and buy low anyway. You are going to have a transaction within the same market. So we are inviting you to think of all those scenarios and then what would be the best workable solution for you. And we are here to help you. We are here to provide you with a 30 minutes consultation. Call, ask us any questions you have, and we are here to help.
Yeah, I'm happy to talk to you guys.